All right, so I'm going to go ahead and walk through these. I went ahead and did some of them for you. So this is just to practice doing these. And so on Nick's problem, we sell them for 125 and the cost is 80. So my contribution margin is $45. To get the CMR, which I will only need in a few minutes. And so the answer for letter A is $45. And then what is the break-even point in units? I would take the 450,000 of fixed costs, and I would divide by 45 each. So that would be 10,000 units. The contribution margin ratio, I would need to find that. And to find that, what you do is you basically, to get the ratio, this will always be 100%. And to find that number, it's 125 divided by 125. This number will be 80 divided by 125. And then this number will be 45 divided by 125. So 80 divided by 125 is 64%. And 45 then would be 36%. And I know that because 100 minus 64% is 36%. But also I can take 45 divided by 125 to get 36%. So my break even in units is fixed cost of 450,000 divided by my CMPU of 45. My contribution margin ratio is 36%. And so to find my break even in units, I got 10,000, but in dollars, I can just take the 10,000 times 125 each, and I got 1,250,000. But because I have the CMR, I can also take fixed cost divided by CMR. So I can take 450,000 divided by 0.36. And I got 1,250,000. Okay, so next is Ashley's problem. And on Ashley's problem, the way you do this one is it wants to know the break-even point in units. And so you take your fixed cost divided by your CMPU. So my fixed costs are 80,000 and my product contribution margin is 40. So I don't know what I sell them for. And I don't know what the variable cost is, but apparently my CMPU is 40. So I would just take 800,000 divided by 40 to get 20,000 units. And then I want to achieve a target profit. So to achieve a target profit, I take my break-even formula and I just add profit to the top part. So I take my fixed costs of 800,000 and my target profit is 80,000. So then I take 880 over 40 and I get 22,000. And then on this one, it says that fixed cost increased by 10%. So I need to take my fixed costs and I need to make them go up by 10%. So 10% of 800,000 is 80,000. So my new fixed costs are 80,000 increase. So I'm going up to 880. So then I'm going to take my fixed costs of 880 and increase by the target profit of 80. So up top, it looks like I have 880 and 80. So 960 divided by 40 each is 24,000 units. Okay, so on the next one, and this is where I left off because of my video, I messed up and I had to start over. So Tina Burris sells insect repellent and each can is $2.50. So my variable cost per can is 60 cents. So it looks like I sell them for $2.50 and they cost me 60 cents, which gives me $1.90. So for every can of insect repellent that I sell, I make $1.90. But it says the fixed costs are 50,000. So, and then I want profit of 18, but at the break-even unit, the break-even point, I don't have to worry about that. And so what I need to do is I need to take $50,000, which are my fixed costs, divided by CMPU. So 50,000 divided by 1.9. Oh, ugly number. So 26,315.79. And so the key here when you're breaking even is you can't sell a partial can of insect repellent. So you have to you always round up. So you have to go ahead and go up by 1. So instead of selling 26,315.79, you have to round up because you can't sell a partial can. So 26,316. Okay, so that's the number of cans. If we want our answer in dollars instead, then we can take that number, 26,316 times 250 each, to figure out what that number is. So I would need to take the 26,316 times 250, 65,790 in dollars. The other way to do that is you could go ahead and find the CMR. So if I want to find the CMR, then this number is always 100%. And then 60 over 250 is 24%. And that means this number would have to be 76%. So if I take $1.90 divided by 250, it's 76%. So I can also take my fixed cost divided by CMR. So my fixed costs are 50,000 divided by 0.76. And I get 65,789.47 or 65,790. Okay. So to achieve the profit goal, what must before tax profit be? And then how many units to get there? So I need to first gross it up. And so I want to take my target profit of 18,000. And I'm going to divide by 1 minus the tax rate. 1 minus 0.35. So then I would take 18,000 divided by 0.65. And I got 27,692.3. So 27,693. And how many units have to be sold to achieve that target profit? So then we would take target profit plus fixed cost and divide by CMPU. So our new target profit is 27,693 plus fixed cost of 50,000. And we're dividing by the PU because I want my answer in units. And so I make $1.90 per unit. So if I take 27,693 plus 50,000 divided by 1.9, it looks like I need to sell 40,892 units-ish. And there may be a little bit of a rounding error here, but that's the number of units I would need to sell to be able to have profit take home of 18. I'm really curious at this point. So I think I should take this number and I should plug it in and see what happens. So I'm just going to do a new one. And I want to look and see what would happen if I actually sold that many cans. So this is a good exercise. So remember that revenue minus variable cost is contribution margin minus fixed cost is net income. And I'm selling these cans of insect repellent for $2.50 and they cost me 60 cents. So every time I sell one can, it's $1.90. And I'm wondering what will happen if I sell exactly 40,892 cans. So if I sold exactly 40,892 times 250 each, and I took 48.92 times 60 cents each, these numbers are just so ugly that it's hard. And then my fixed costs are 50,000. So then I'd have that much, and then I need to pay taxes. And taxes were 35%. So then that gives me my net income. It worked. Okay, so I hit a little above 18,000. So my question is, what if I sell one less can? Because I'm just wondering if my rounding is right. So if I only sell 40,891. I can do it. I can make it. It was really close when I was looking at the number. It was 4891.05. So I figured that it would come out like that. So if I only sell 4891 instead, I'm actually okay. Because if I sell 40,891 at 250 each, this is my revenue. And 4891 times 60 cents each, that's my variable cost. So my contribution margin is revenue minus variable cost. I have to pay 50,000 in fixed costs. And that gives me 27,692.90. And then I get to pay 35% to the government. And then I'm left with 18,040 cents. If I sold one less can, there's no way I'd make it because one more can costs 60 cents and I bring in 250. So if I sold 40,890 instead, then if I took this down by one more, then I do not make quite enough. So then I only make 17,999.2 and I want to make 18,000. There's a lot of stuff going on there, but I think that makes sense-ish. So, okay. And so the next one is Chris's problem. On Chris's problem, he currently sells his products for $2 and the variable cost is 40 cents and fixed cost of 30,000. He's purchasing a new machine, which will increase fixed cost by 5,000, but variable cost will be cut by 20%. So what I want to know is what is the break-even point now? And so currently he sells them for 2. And so SPPU minus VCPU is 2 minus 40 cents. And so it looks like his CMPU is $1.60. So his fixed cost divided by CMPU would be 5,000 divided by 1.6. 3125 units. Okay, so that's what his current break even is. And what would be the break even point if we bought the new machine? So it looks like our variable cost will be cut by 20%. So current variable costs are 40 cents, but we need to reduce them by 20%. 20% of 40 cents is, what is that, 8 cents? 0.4 times 0.2, 20% of 40 cents is 8 cents. So our new variable cost is 32. Oh, I know I just wrote a whole lot to try to explain this, but for some reason, students tend to get really freaked out when I start doing this. So if I'm trying to reduce cents by a percentage, 20% of 40 cents, 20% of 40 cents would be 40 cents times 0.2, 20% is 8 cent reduction. So our new variable costs are 32 cents. So now if I do fixed cost divided by CMPU, my fixed costs are going to increase by 5. And so they used to be 5,000. Oh, guys, I think I did it wrong. So my fixed costs were 30,000 up here. If you were in the room with me, you would have stopped me. So 30,000 divided by 1.6, 18,750. So 18,750 was my answer for A because I just took the 5 and I needed to take the 30,000 of fixed costs. And so now my new fixed costs are going to be 35,000 because we're going to increase by 5. But my new variable costs are 0.32 instead of, no, that's not right. That's not my new variable cost. I'm going to do SPPU minus VCPU, and it's 2 minus 32 cents. And so now I make $1.68 per unit. So this is my CMPU. Okay, so now my fixed cost divided by my new CMPU is $1.68. And so now we'll see what it takes to break even with the new machine. So what I did was I increased my fixed cost by 5,000. Purchasing a new machine will increase the fixed cost by 5,000, but it decreased my variable costs. So when my variable cost went down, it made my CMPU go up. And so now my new break-even point is 35,000 divided by $1.68. Oops, 35,000 divided by $1.68. 20,833. Oh, and was it 833 point something? 20,834. Okay. So the question is, should he buy the new machine? Yes or no? And my answer there would be, it depends. It makes break even go up, but if you are normally selling a bunch, go for it. So like right now, if we look at just the break even point, then I would say, no, don't do it. So if we normally operate right around the break even point, you're going to have to sell an extra couple thousand units to be able to cover that. But if we normally have profits, if we normally sell, instead of 18,750, if we normally sell 30,000 units, then I would say, yeah, go ahead and do it, because the per unit cost is going to be different and it's going to save us money. And so I would say you'd probably come out better. So let's take a look at that. Let's go ahead and say, like, what if right now we sell like 18,750 is the break even point, right? So let's say that right now, and I'm totally just making this up. So right now, McKenna sells 25,000 units normally. So for current method, my SPPU, let's do in total and per unit. Normally, right now, we are selling them for 2, and they cost us 40 cents. So every time we sell one, we make $1.60. And so sales right now, we're selling 25,000 units. And I did make that up. I'm just kind of looking to see what would happen. And right now our fixed costs are 30,000. So if we take 25,000 times 2 and 25,000 times 0.4, 50 minus 10 is 40, 40 minus 30 is 10,000. So right now I would say that I'm making $10,000 with the current. But if I buy the machine, then if I'm selling 25,000 units, then this cost is going to change to 32 cents and this cost is going to change to 35,000. So 25,000 times 2, 25,000 times 32 cents means that I have contribution margin of 42, but my fixed cost increase brings my net income to 7. So if I normally sell 25,000, I would say this is a bad idea. But what if instead of selling 25,000, I normally sell 35,000? If we run these numbers on 35,000 units, and we change this to 35, then instead of 25, I'm going to do 35, and instead of 25, I'm going to do 35, and instead of 25, I'm going to do 35, and instead of 25, 35. Okay. I'm still worse off. I don't know what come out better. So I was off by 3. Are you messing with me? All right. And so now it's going to bother me. Like, at what point would it not matter? And so, because now my differential, it was 3, and now it's only 23,800 versus 26,000, 2,200. So what if I normally sell 50,000 units? Like, I don't know why I'm doing this. I don't know why you guys are watching me do this on a video. I apologize. But I'm just messing around with this because I want to see if at any point, at some point, it's going to actually be beneficial to me to go ahead and buy this new machine, because the fixed cost stays the same, but I'm saving 8 cents on every unit. And I guess that's probably what I need to come up with. Never mind. The easiest way to do this is to say 50,000 or 5,000 of extra costs. And it's 8 cents per unit that I'm saving. Is I need to sell, that's a lot more units to be able to make a difference. So let's do 50, and I'll show you that isn't going to work. 50,000, 50,000. See, it's still not working. And that's because I've decided that I actually have to sell an extra 62.5 to make it work. If we do 62.5, is it going to work? Rosie wants me to stop too. 62.5, that was the good number. So 62.5 is the number of units I would need to sell for it to become irrelevant. And so my guess is that the answer would probably be, no, don't do it. Go buy the new machine. Hi, buddy. Okay, so one more question and then I'll be done with this video. This one's actually a pretty easy one. So what I'm going to do is I'm going to take the selling price per unit. And so I've got 8 million in sales on 200,000. So let's do the per unit off to the side. So 8 million on 200,000 is $40. And so my per unit would be 40 over here. And my variable cost per unit, 2 million on 200,000 is $10. And so it looks like my CMPU is $30. So my selling price per unit is 40. My variable cost per unit is 10. My contribution margin per unit is 30. My contribution margin ratio, that one's always 100%. And then 10 divided by 40 is what? 25%. And 30 divided by 40 is 75%. So again, the way I did that was 40 over 40. 10 over 40. I don't know why I always do all three, but I do. 30 over 40. Okay. So my contribution margin ratio is 75%. Break even in units would be fixed cost of 3,500,000 divided by CMPU of 30. $116,667. If I want that in dollars, I can take 3,500,000 and instead divide by 0.75. You can also take this number times 40. So that should be the answer, but divided by 0.75, 4,666,667. And then the next question says, if they raise their price by $5, what happens to break even? If you raise your prices, then break even will drop. Because if you raise your prices, then you won't have to sell as many to break even. If variable costs per unit decrease, if costs decrease, then break even will decrease. And assume the net income shown in the problem is before tax. How many units will we have to sell to have after tax of 2.5? If their tax rate, how many units would you sell after tax net income of 2.5 if their tax rate is 20%? So what we'd have to do is we would have to take 2.5 million divided by 1 minus the tax rate, which is 0.8. And I got 3,125,000. And that would be your net income. So to find the number of units, I would say my target profit plus fixed cost divided by CMPU. So 3,125 and fixed cost of, what were the fixed costs? 3.5 million. Well, not really the fixed cost, it's a lot of fixed costs. Okay. And then I'm going to divide by the CMPU. And the CMPU in this problem was 30. $3,125,35 divided by 30. It looks like 228.34. All right, that was a lot. So I'm going to see how long that video is and see what I'm going to do about it. I don't know how I'm going to handle this. And so I hope you guys are doing well. I'll talk to you guys later. That's the end of chapter 5.